Yes, there is another stock market crash coming in my opinion. And in today's video, I want to explain exactly why I believe there's another stock market crash coming, and this one will be worse than the one we just went through, okay? I'm going to go all into details on this. Hope you guys enjoy this video. As always, I forgot to say it yesterday, so let me say it today. Smash the thumbs up button. Let's start getting into this, guys, okay? Two things we got to cover before we get into this video, okay? The first is I could be completely wrong about this, okay? I'm going to show you a lot of data in this video. I'm going to give you a lot of opinion, and I could be absolutely wrong. Maybe the stock market crash doesn't come. Maybe from here, we're just up, up, and away, and everything's grand, okay? So I could be 100% wrong, so I just want to say that. So don't make any decisions based upon what I tell you in this video. Think about it for yourself. Make your own decisions out there, okay? As you guys probably know, I'm not putting any more money in the market. I haven't for pretty much the last like 2 or 3 weeks, and I'm interested in being on the sideline. I have a lot of money invested in the stock market, but in terms of new money, I'm sideline staying for right now. I'm sideline watching, okay? But I could be wrong about this. Maybe with the next stock market crash doesn't come. I just want to put that out there as a disclaimer. So make your own decisions, make your own judgments, okay? The last thing I want to cover, a lot of people watching the channel right now that aren't super familiar with me and my content and the channel. I am somebody that's super bullish, okay? I am super bullish. It's like I got a bull on my shoulder almost all the time, okay? Why am I always pretty much optimistic and super bullish? Well, I'm an optimistic person for one, okay? I always look at the glass half full, as they say, right? Not just that, I mean, it pays to be bullish most of the time. Where's the stock market go most years? Up. Where do stocks go most times? Up, okay? You know, great companies, what happens to great companies? They 5x, 10x, 20x, 100x their stock prices over a course of 5 to 10 years. So it pays to be bullish most of the time. But let me just tell you, I'm the least bullish I've ever been, okay? I'm no doomsday person out there that like just puts out scary content to put out scary content. There's that side of YouTube's exists, and I know those channels, and they just, you know, it doesn't matter what type of market it is, they're always preaching negativity and doomsday scenarios and all this and that. I'm probably the furthest thing from that. If there's ever like a hate comment I get a lot, it's like, you're too bullish, you're too optimistic on blah, 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 okay? Right now, I'm the least optimistic, I'm the least bullish I've ever been in my 11 or 12 years I've been in the stock market. The least bullish, and by far, it's not even close, okay? It's not even close between all the other times and kind of what I'm feeling right now and when I look at this data, okay? So I just wanted to cover those, you know, before we start getting into this, okay? So, as of yesterday, the Nasdaq was down 6% year to date, and the S&P 500 was down 12% year to date, okay? That's as of yesterday. And most years, I would look at that and I would say, we need to be buying stocks, man. That's a dang good deal. There's got to be a countless amount of deals out there, okay? That is phenomenal. I love this. I love this market, okay? This is a different scenario. This is way, way different than the average year. And if this was happening, I would just be buying stocks, okay? Let's be honest. We had a Lego tower built to the sky, and it's just completely fallen down now, okay? The Lego pieces are everywhere for us to step on with our foot and go, ow, okay? That's what the scenario is now. We had a Lego tower to the sky, like 3 months ago, like literally 3 months ago. The Lego tower was standing, everything was looking great, and then Rona came, right? And it just caused mass devastation. And that's the Rona right there, okay? It's just mass devastation. And what I feel like we're in right now, we're in like around like the eye of the hurricane, where the stock market is kind of treating this like, you know, hey, it's not that bad, blah, blah, blah. And I'm just looking and I'm like, we haven't even got through the full storm yet. We still gotta see what the devastation is. We can't even see the devastation yet. We're still in the storm, okay? We're still in the huge storm. And when it finally does end, and when businesses finally start to open, we'll get to see what the devastation was, okay? We'll get to see what the devastation was. No different than if you're in a tornado situation, right? Shout out to my people that live in a tornado alley, or whether you live in, you know, a part that, you know, has huge hurricanes or something like that. You don't know what the devastation, you go to your bunker or whatever, you go hiding, you don't know what the devastation is until the storm's passed, you come out and then you see, oh my gosh, my whole town just got blown down, okay? That's what happens, and that's the economy right now. That's the stock market right now. No one knows. No one's really like being able to go out there yet. We're just in the eye of the storm, and eventually we're going to get to see, okay? Now let's start going through some more data, okay? Let's start looking at some data. So the market trades off a few things. It trades off confidence, and the markets in general trade off of what's called like forward estimates for basically what earnings will likely be in the S&P 500. And from what we're looking at here, forward 12-month estimates for S&P 500 would put it at like 18.81, and I can tell you that number is way higher than that. That number is dramatically low, okay? That's ridiculous, okay? The market trades off S&P 500 forward PE estimates, and I can tell you that number way too low. It's way higher than that, and I mean dramatically higher. I'm talking probably, at least 50% to 100% higher. Keep in mind, that's taking the next 12 months, okay? So that's taking this quarter we're in, which is a horrible quarter. Next quarter is going to be just as bad, if not worse. And then the 2 remaining quarters after that. And I'm just looking at that and I'm like, whoa, those numbers are way, way off from what they have basically there on the WSJ, okay? That's just insane, okay? Goldman Sachs, and this was a few weeks ago they came out and did this, so they might have brought down numbers since then, okay? But Goldman Sachs put out there that they believe S&P 500 corporate earnings in 2020 would be $165, which was down from their previous estimate of $174. And I can tell you, dream on about that number. Dream on. We're not even going to get anywhere remotely close to that number, in my personal opinion. $165, that's going to be a joke. Wells Fargo Investment Institute, they put out their numbers. They believe S&P 500 earnings for 2020 would be $166 compared to previous view, which was $172. I can, if they had a bet between me and them, I would probably place every dollar I have to my name on the fact that we won't hit those numbers, guys. I mean, we won't even get remotely close to those numbers, in my personal opinion. That's just an actual joke. In my opinion, we're going to be lucky. We're going to be lucky if we have $75 of S&P 500 earnings in 2020, in my personal opinion. We'll be lucky if we get $75, okay? These estimates from all these analysts around what 2020, earnings will be for the S&P 500, they all need to come down in a massive, massive way. And and really they can't come down that much as of right now, because why? They haven't heard anything from the companies. And if you haven't heard anything from the companies, then you really don't know as an analyst how much to bring your numbers down. So they've been bringing their numbers down a little bit. But just wait until some of these executives start putting out some of the numbers that are actually coming in and what they expect. That is when the analysts will start to readjust their numbers and bring them down massively. And when these analysts start bringing down their earnings estimates massively, especially when they all are going to be doing it at once, which will happen in my opinion, that's when you're going to get a massive, massive sell-off in the stock market, okay? We're going to be lucky to do $120 of earnings, in my personal opinion, for the S&P 500 in 2021. $120. Why do I believe this? Well, okay, when business does open back up, whether it starts opening back up in May, June, July, August, regardless, whenever things start opening back up, it's not like all the businesses are going to be back to 100% capacity. It's not even like they're going to be remotely close to that. Keep in mind, unemployment rates are going to be ridiculously high, and the longer and longer this goes, the worse and worse things are going to be, right? I mean, things are already going to be really, really bad if we start in May. If we have to wait till June to restart the economy, things are going to be even worse. Unemployment rates will be even higher, and it'll take even a longer time to bring it down. It'll take even a longer time to get corporate earnings back. We're talking years, not months, okay? I think we're going to be very lucky to do $120 of earnings for the S&P 500 in 2021, okay? So let's go ahead and work out some numbers. Let's say the we'll see where the S&P 500 closes at today. Let's say the S&P 500 closes at about 2,800, okay? Go ahead and do the math on that. $120 of earnings, and we're basically sitting at 23.3 2021 PE when it comes to the forward estimates. That's rich, okay? That's really rich. And keep in mind, I think we're going to be lucky. I think we're going to be fortunate if we can do $120 in 2021 because of how high unemployment rates will still likely be in 2021, how much GDP will still need to recover, how much of a mess the business landscape will still be in 2021, because this has gone on for so long that it's just going to be tough as we start to climb out of it. It's going to be a very, very tough situation. Never mind that. Imagine if the Rona takes back off in the fall and we have to close down business again. That number of $120 won't even be in consideration at that point in time, okay? So I think $120 of earnings for the S&P 500 in 2021. I think that is, I think that's fair, but I think that might actually be a little bit aggressive. And meanwhile, the stock market the past 3 weeks is like a kid at Disneyland. That's what it's like. I mean, it's just acting like, woo, this is happy times, man. This is happy times. Look at the S&P 500. Since it bottomed around, March 23rd, March 24th, it has basically been up in a straight line. It hits that bottom of 2,200, and then yesterday it's trading well over 2,800. Are you kidding me? In this environment, that's incredible. The Dow Jones Industrial Average, it bottoms at 18.3, and yesterday it's trading at over 24,000? Over 24,000? Oh, what, 5,600, 5,700 move upward in a matter of a 3-week span in the Dow Jones Industrial Average? That's just ridiculous. The Nasdaq Composite, same exact situation. It bottoms out 6,600. Next thing you know, yesterday it's trading over 8,500. The stock market's in fairy tale land, and we don't have anything good to say. We don't have anything good to say out there. I can tell you that. Everything is bad news, bad news, bad news, and it's real bad news. It's not made up. Let's just talk about some scary stuff. Now this is real talk, okay? Home builder confidence index takes biggest monthly dive ever. Unemployment rate is skyrocketing to the worst numbers we've seen ever. We've never seen jobless claims come in this fast and at this level or even remotely close to this ever, okay? This isn't like this is, it's just kind of bad compared to this. No. These are worst ever. GDP, the worst ever numbers we're going to get for GDP, okay? Goldman Sachs was talking about GDP decline in the US of 11% from a year ago. I think that's way too optimistic. I think it's going to be way worse than that, okay? And GDP next quarter is just going to be awful. I mean, absolutely abysmal. It's going to make every other GDP decline we've ever had in the history of the United States look like it was absolutely nothing, okay? Absolutely nothing. And so let's get this right, okay? Unemployment, the jobless claims, worst ever. Home builder confidence, worst ever. Business confidence in general, especially if you're thinking about the next year or two, probably worst ever. GDP declines, worst ever by far and away. And once again, the stock market has been climbing the past few weeks, okay? Now, here's the interesting thing. Let's go back to the 2007 through 2009 recession, which, keep in mind, I think what we're in right now is way more dramatic. And I don't just think that. Look at the numbers. Like, the numbers are proof in the pudding. Like, it's way worse, right? But we go ahead and look at a stock chart. This is basically showing you the S&P 500 from 2007 through 2009 during the great, financial crisis, whatever you want to call it, the housing crisis, right? We saw some nice pickups in the market throughout that stock market crash, okay? We got that initial fall in the market, which wasn't nearly as dramatic as the one we experienced, obviously, like 2 months ago, right? But we got that initial fall in the market, and then the market actually bounced back almost to new highs. It literally did. And then things started to go down and get worse and worse, and then we had a nice bounce back. And next thing you know, the S&P 500 is trading back over 1,400. And it's looking like, okay, then we have another big fall, okay? But then the market starts roaring back, and next thing you know, we're over 1,300. And then finally the bottom falls out. And next thing you know, the S&P 500 is trading under 900. And we have a little spike up back to 1,000 before we get another fall all the way down to under 800. And then we have a nice spike up again, and it looks like, okay, we're coming out of this, and we get over 900, and then we have the one last granddaddy of them all fall, which knocked everybody pretty much out of the stock market that was in at that particular time, because they were just like, this is just ridiculous, this is too painful. And S&P 500 falls under 700, okay? Incredible, absolutely incredible when you go back and you look at that stock chart, because there were plenty of times when the stock market was bouncing back and it was looking like, okay, we're up and away now, and it was just got worse. And it was up and away, and it just got worse. Several times that happened. And so I think when we're looking at the current situation, I think we got to take that into context that, yeah, the market's bounced back, 5,000, 6,000 points, boom, 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 real quick. Yeah, we just might be in part of a much bigger fall. Let's just put it that way, okay? The stock market was kind of doing what it should have done, okay? It fell super dramatically because we had a super dramatic situation where it was like, oh my gosh, all of a sudden the Roni's taken off, the Rona situation, we're gonna have to shut down the whole US economy. Oh, we're gonna have to shut down the whole world economy. Oh my gosh. This is devastation. Like, this is crazy. And so stock market kind of reacted the way it should have. It was the fastest stock market drop in history, literally. There was no other time you can go back throughout history where the stock market fell that much, that fast. It was like 22 trading days and the market had fallen like 35% plus. It was incredible. But honestly, when you look back at it, it should have done that because we just had a shocked situation and we were coming off of let's be honest, we were coming off of an elevated market that was pricing in a great 2020, and all of a sudden we got the worst case scenario. So that was warranted. But in my opinion, after that happened, we should have hovered around that same price. We should have hovered under 20,000 for, the next week or two until we got to see kind of how much longer things were going to have to go, because there was still some optimism that maybe we could open up in April. Remember Trump even mentioned, oh, maybe we'll open up for Easter. And then that started to fade, and then it was like, maybe we're looking more toward like May or June before we get the economy open. And I think that was when we should have seen another big decline in the market toward the back half of March, or really like the beginning of April. I think we should have just seen the market go down and down and down and down. And in my opinion, where, let's say, the Dow Jones Industrial Average should be, I think the Dow should be right now at 16K to like 17K. I think that's where the market should be right now. I think to be trading at 23,000, 24,000 like the Dow Jones Industrial Average is, I think it's just ridiculous. And I think, the market will readjust. Keep in mind, stocks can be overvalued for a certain amount of time. The stock market in general can be overvalued for a certain amount of time. But eventually, things get priced accurately or get priced underpriced, okay? And I can tell you at 16,000, 17,000, I would be a buyer of the market because I would be looking at a lot of these companies, and despite the devastation we have to go through over the next few years and we're going to have to work through that, I would be saying, you know what, there's some great deals out there that I've got to go ahead and take advantage. But right now in this market, when we're at Dow 23, 24,000, when the S&P 500 is around 2,800, when the Nasdaq's down, 6, 7% year to date, when we're looking at that type of market, it doesn't make me say, I've got to go buy stocks right now. It really doesn't. It's just not that type of market. It's just the stock market isn't giving us any good deals. And you could make an argument that even if the market was at 16K, 17K, we still might not be getting that great of deals, considering this could take 3 years to climb out of this, or 5 years to climb out of this. I think it's really hard to say these companies' earnings are going to be back to 2019 levels in 2021. I think that's a fairy tale. Maybe 2022, but I think that's even a question. I think if you're thinking about these companies getting back, not all of them will get back, but the ones that will get back to those 2019 levels, you could be looking at like 2023 for a lot of these companies. And that's why I feel the market should be dramatically lower than it is. And I think it will happen. I think we will get this stock market crash once business opens back up and people start figuring out, whoa, okay, it's not back. Yeah, we open, but our business is down considerably, and we can't see it getting that much better anytime soon. I think when that happens, that will be the moment when the stock market will start dropping again, and it will shock everybody, because keep in mind, a lot of traders had pegged this as a situation where, oh my gosh, all the bad news is going to start coming out, the market's going to go lower, right? All the bad news started to come out, unemployment rates, all jobless claims, GDP declines, all these numbers started to come out. And where's the market gone? Up and up and up. And so now a lot of people are figuring, okay, once the economy opens back up, we're going to continue to roar higher. Things are going to be great. Things are going to be up and on the up and up. And I think that's the moment when things are actually going to fall in a massive, massive way. Because then there's no more like not just looking out the window. Then you got to come out from your dungeon. You got to look around. You got to say our business is 50% of what it was. And, our hope is it can be like 60% of what it was maybe next year. And at that moment, that's when these analysts have to start taking down their numbers, and that's when things will get very interesting. But there just aren't any good deals in the stock market right now. But you know what? If the stock market won't give you a good deal, I will, okay? I'll give you guys a good deal, okay? April 17th through the 19th, we got a huge deal coming on the private stock group. If you ever want to learn exactly what I look for in stocks, as well as how to build successful portfolios, go ahead and make sure you put in your email. Down there will be the pinned comment, and get in the private group with us. We're going to have a semi-annual sale. It's going to be huge. privilege. You get to be part of the Discord chat. You get to see all the stocks I'm buying and selling, all things like that. So I hope you guys enjoy that deal. Thank you for watching and have a great day.